Hey, greetings, traders. Happy Tuesday. Happy spring. First and foremost, I want to apologize for the leaf blowers in the background. It is spring, and with it, spring cleanup up here in New England, north of Boston. I'm Samantha LaDuc, founder of LaDucTrading.com, and I'm very happy that you joined myself and Jonathan Gibbons of VigTec IO. We talk about market structure in our macro to micro power hour. And just a few housekeeping items before I bring Jonathan in, and we talk about options and the market. First and foremost, I do this every single Tuesday, Thursday. It's a lot of fun and it is a challenge. I learn about a whole bunch of new methodologies to analyzing markets across asset classes, every one, and timing and such. This is really a great place to learn and profit. So Tuesdays and Thursdays. Tuesdays, I'm with Jonathan Gibbons of VigTec IO, and this is, his website. We're going to dig into options matrix. Then after this is done, a little housekeeping. Oops, sorry about that. I'm going to be putting it onto my YouTube channel. So LaDuc Trading YouTube channel is right here, and down below you will see macro to micro power hour. And there's Jonathan's face every Tuesday. Well, that's not him. That's Tuesday. So apologize for not putting you into the room right away, Jonathan. I can see your raised hand. I will raise you and promote to panelist. There you go. All right. So we are live on this Tuesday, and I will, like I said, be posting this on to my YouTube channel. In the meantime, welcome, Jonathan.
Hi.
All right, I got to turn you way up to make it over the leaf blowers in the background.
Oh, you have lawn work?
It's spring. It's, hey, the snow's finally gone.
Hey.
So you look at you. We're not in $8 Target t-shirts right now.
That's right. I got I got a haircut a couple weeks ago, and now I have a clean shirt on. So things are going well.
Okay, great. And despite burning the midnight oil, because I know you have been really churning out a lot of code for the launch,
Yep.
and in large part, I want to get into that for sure, but maybe we should do a little bit of chat about the market structure. And then, since earnings start tomorrow and the Coinbase IPO, I know we'll want to kind of talk about that as well. Definitely turn up your volume, if you will, Martin asks. And I will do the same just for the recording.
How about now? Is that better?
Yeah, good for me.
Okay, good.
Okay, great. Super. Well, all things ARK. That's my long and short of this market. It has been really kind of exciting. March 31st, the All Things ARK, which is the Cathie Wood ETF that has a lot of growth plays, Tesla and TDOC and Roku, the top 10 list I called them, and they have all done except for one China ADR, because right now the Chinese ADRs are definitely persona non gratis right now. They have been phenomenal plays with a NASDAQ melt up, if you will, in certain key, not just the big cap, but also mid cap tech. So I want to get into this earnings season and see how well we perform relative to expectations, because a lot has been baked in. So what do you think?
Baked in. A lot has been baked in. Yeah, you could say that, right? Like, I don't know the last time I saw a PC ratio for stocks that's like, is my mic good? Can you guys hear
A
me?
little bit more, a little bit more.
Yeah, hold on. Let me try something real quick.
Okay. Oh boy, something just clicked loudly. So that sounds good.
Is that better?
Huge.
Much better.
100%. Now we can hear you, Crystal. That's awesome.
Okay, good. So I would say the last time I saw, a negative, like kind of connotation to the PC would be a while back, right? And so, I mean, we're in like beyond melt up land, in my opinion, right? And so this kind of just bleeds over, and even like the Momo stuff that we've been tracking for some time is still catching, all call bid. Like I haven't seen like a even moderate to neutral landscape in any of the single stock stuff again. So I from my perspective, like market structure, it's like all left those levels that we were talking about maybe 2 or 3 weeks ago. And so we're kind of just floating around up here, and money's chasing money. So I'm curious, like, is there some sort of net sell ceiling, or what level that might come in the next few weeks? I don't know. I haven't seen anything that leads me to believe that, because I'm looking at it almost on a day-to-day basis at this point. And like, until I see some shift in the day-to-day, where at least some change, and I'll show everybody what I'm looking at, here in a few minutes, but like, we're not seeing any shift even in the day-to-day, like from the perception of like call buying, right? Like there's just no ETFs. The index environment has seen a little bit migration towards a neutral perspective, it feels like. And then, I got your charts are done, right? And like we're just looking at those today. And so you're seeing a bifurcation, and the measurements that you track as it relates to the index is floating. So those will be done and out tomorrow for folks so they can look at that too. But like it's and they're very, very clear. You got, what do you call it? Jaws.
Yep.
Right. There's a lot of Jaws setups, I should say, across the board. So I can't see anything microstructure day-to-day basis that's changed, in the sense that I can even see anything even tipping. So I got to give the benefit of the doubt that unless there's like, and even when we run their earnings scans on our side, it's all like predominantly call buying. I haven't seen anything even be like put buying from any perspective. So
there's been a lot of put selling. I did actually retweet.
Yeah.
But again, this is a workable formula. So I'm looking for a little bit what's called capitulation buying versus the capitulation selling. But I would love to show a few key. You just mentioned the divergence charts. And I think they're kind of instructive, but until there's actually a turn, then you just follow the Momo. There's no question. I mean, the NASDAQ moves, big cap and mid tech. I did it again. And all things ARC has been a phenomenal trading backdrop. I mean, and it's not done. It does not look done. And yet we're going into options expiration, not just tomorrow, which is, VIX, but the month end on Friday. It just seems to me that we will definitely have some softness into next week, but it is hot fire flames this week. So here's some divergences, big picture, since we kind of share that. First, this is the NASDAQ McClellan Summation Index, which is very busy for those who are not into intermarket analysis, but I pointed out for the obvious reason that here's the NASDAQ right here, if you can see my little moving doohickey with this yellow arrow. And here is the NASDAQ summation index ratio way the heck down here. That's called a divergence. So at some point, this will kind of base and cross and move higher, and that will be, in other words, potentially bullish. Right now we have a lot today, but I'm talking about for a trend, not just these, trades that have been phenomenal the past 2 weeks in NASDAQ. So this is something that I look for, and it has not confirmed yet. The other thing, which is definitely big, and by the way, this is on a weekly, okay? So the translation of this is waiting for either a cross up to confirm bullish trend, in other words, this divergence of lots of tech are actually way underwater, versus the NASDAQ catching down. All right, so that's just a divergence. This is another one, speaking of earnings coming up tomorrow, and I post this every quarter because it is so interesting, and yet another divergence, which doesn't mean anything because of, what are we, 5 trillion in stimulus, right? So we have fiscal spending on top of QE to infinity. So this is, of course, very warped. But I am going to still point it out that this is January 2020, and you can see where gap SPX on a monthly chart is way the heck down here. And every time since the 90s, except for one, where this has crossed over, has been a bear market. So you can see 2000, you can see 2008, even our recession, if you will, that we had back in 2015-16. So we, quote unquote, should have massively lower print in SPX, like 2400, 2500, not where we are. But that's not what's happened since the March Fed intervention, right? So we're way up here with SPX and we're way down here with gap SPX, and that's a divergence as well. It doesn't seem to matter yet, but I pointed out just because at some point, outliers will revert, but we need a catalyst, and we don't have one yet.
How does it revert, right? Like that's a question I wonder. So how does it revert? Like in a sea of liquidity?
Sea of liquidity, capitulation buying. That's it. They're done. They're tired. There's an air pocket of risk below. They forget all about risk. And then something comes in, butterfly wings. I don't know if it's geopolitical. I mean, we do always have that particular backdrop, but it's not front and center a concern, whether it be Taiwan and China, Iran and Israel, Russia and Ukraine. I mean, that's one thing that we really don't pay attention to. But then the J&J vaccine that was just paused, if you will, it makes a little bit of a concern for some that it's going to be the vaccine rainbow. You need a vaccine, right? So if there are some concerns about the reopening because of the vaccine rollout or efficacy, or they pull it for whatever reason. So I think, yes, exactly. So possible the J&J vaccine is today. So we don't really know. I don't really know. It could be another hedge fund blow up that actually, this market feels very much like the Tiger Cub guy, right? Huang, who did who lost 2 billion in 2 days. That was a situation where he was levered 5-1, 7-1, some say. He was down 15 to 20%, and that blew out his account. And 4 banks then suffered. One didn't, Goldman, they sold first. But Nomura and Credit Suisse have then, since then, obviously with huge losses, especially Credit Suisse, took out 2 years worth of profitability. They actually are now closing down on leverage on their family offices and hedge fund clients. So that's one situation. Also, Barton Wang came on last Thursday, and that was so instructive. Highly, highly recommend that webinar because it's just so different, right? Where he talks about the issuance of supply of the stimulus and what's in the Treasury account, and the Fannie Freddie Mac with the mortgage refinancing amounts, and now tax refunds, whatever, tax payments, all of it's combined to this endless sea, it seems, of liquidity, which can actually cause some plumbing disturbances. So he calls it the SICO market, SICO, which stands for, oh gosh, it's a crowding out. Something crowding out. In any case, so there are some, again, we don't have it yet, but there are some potential triggers for, for risk. And right now, risk is very much ignored, and the NASDAQ rotation is in full swing. I say trade it, smoke them while you got them.
Yeah, 100%. I was just curious, like your stimulus indigestion and crowding out.
Thank you so much. Stimulus and crowding out. Yeah.
Yeah, I was just curious. Like, I don't. It wasn't a loaded question. I really don't have an answer on that. Like, I was genuinely curious. Like, when you have when how large are their account? Yeah, true. It seems that the pension situation, and I know I mention this almost every week, is so critical to the functional environment that they'll embrace distortions in the other environments of extreme condition to just ensure that there's limited to no volatility. Like if you pull up a vol,
that's a really great quote. You couldn't say that again. If that what you just said is a great explanation. Like pension funds.
Pension fund. So effectively, I think if I can restate what I just said, I'll try.
It's on video. I can grab it.
Yeah. Well, they'll accept those distortions. Like I saw something last night, $36 sheet of plywood last year, $96 sheet of plywood this year. It's a distortion.
Yeah.
Right. It's a price distortion. It's the same thing that I see like on the options side. You got just a limitless call side. purchasing bids that really just genuinely don't make any sense on any type of measurement, even like theoretical pricing. But they continue to come in. It's a distortion, right? So it's like if you look at that chart you just showed a second ago, and it's like, every time throughout the history of chart logarithmic or what have you charting that you look at, even if you were able to probably grab that data back to the 1900s, early 1900s, like that would probably look exactly the same. Like anytime that you get to some sort of where the companies are no longer earning in any capacity or the perception is even forward, right? It's a repricing of the forward perspective of an entity, and it's the faith in anything that drives the price or the perceived future return of that price. So that's nothing but just that may be the greatest distortion chart I've seen yet, the one that you just showed.
I have a better one here.
Yeah,
and it's not mine.
It's these distortions, right? Like, and so what distortions do we live in? A world of distortion? Like this is challenging thought, right? Like, because I show you the guys' stuff, we track in like we run these scans. Now we can see which you can follow them and watch the footsteps now, but that's like top surface level. These distortions, it's like what stops this level of distortion and brings some sort of reasonable repricing to it, because they will allow any distortion as long as the systemic risk is quelled, which is zero volatility and pensions are stable. And pensions can be an HYG, because I think HYG is effectively a CD. It replaced the bank CD from the 70s and 80s, where you could get 5 to 7% in a CD. And so, you need that money as a retiree, so you're taking less risk in the sense that you don't want to be in full on growth market. And so if with the banks at zero, the Fed full backstop and HYG, it just feels like that is the new CD. And so that has to be adhered to, taken not adhered to, but like protected at all costs, in the sense that we can, in like a bank run. Because when you look at that drop back there in March, that was taking you effectively, it was repriced to your target right there at that
2100.
2100. It repriced to your EPS target, and it wasn't allowed. It was like a bailout, right? Like if you think of it as like an FDIC, and the first thing that they did was they bailed out, immediately HYG. That was like the first thing that was bailed out, and that's the.
But this is a little bit different, because margin debt is collective of individuals and corporations, right? So this, to me, I'm not a margin debt, aficionado. This is why I grabbed this from Suburban Drone, who is very bearish. But like I said, once in a while, some of his charts are just such a wake up, right? And I'm looking, which I love, rate of change. I'm mad at rate of change. And I look at this, 2000, 2007, sure enough, margin, U.S. margin debt in billions is absolutely rate of change right up here again. Now, this is not a perfect timing tool, because obviously this is on a weekly, and this took several months of distribution under the surface, the sold to you kind of market, before it careened over. And by the way, the same thing happened January into February in our market before the COVID crash. From February to March, we had 1 month of sold to you market under the surface. It was so obvious. So I just look at this going, in counterpoint to, okay, they can't let pension funds fail, but this type of margin environment, and then you see an example of the Huang family office, that Archegos, that blew up, literally $2 billion in 2 days. That's the type of, I think, air pocket of risk we still face. In the meantime, in the in-between time, NASDAQ is shooting higher with lots of, love children, ARK love children that just, they're beautiful. They just like, oh, so great. And they're all back in the ARK. Everyone back in the ARK.
Yeah. Two at a time. I don't have anything like dramatically intellectual to add to that. I don't know how. I really don't know how. Like that you turn something that's really a liquidity structure, right? Like the market, when there's such an excess liquidity, how does it suck out so quickly? I mean, I can relate to Barton's, sicko structure, right? That there is some crowding out to an extent, but I think, and then the excess exuberance I've seen in NFTs, the Top Shot NBA Top Shot thing, the some of the gamification and some of the stuff, especially the crypto transformation. It seems to be the longer this runs on, the more likely that it changes the infrastructure of certain things. And what I mean by that is like, and this is just a thought I've had, is that when you create let's say it goes to 4,400, 4,500 in the SPX, the sheer size of the moves that then make the drops, let's say it drops 40%, that's taking it back to 2,800, 2,900. You know what I mean? You never even revisit the 2,100 level again. And I just wonder, like, especially with the crypto environment, the longer that there's distortions to where nobody really knows what value is anymore, if then things are just rebuilt. And I say that totally as a just like speaking out loud thing, because people are like here and you want to hear my thoughts or what have you. I've been wondering that to myself, where if you don't have any type of back to a mechanism of back to reality, where the reality would be the actual tangible physical mechanism, and then you've got the perception, right? Volatility is the reconnection of those two things. So volatility is the actual kinesthetic energy that takes you from your perceived reality back to whatever the actual tangible reality is. Well, we're so far disconnected that should be very violent, but at the same time, and it should be more violent than March last year, based on this type of stuff and based on just general marketplace stuff. But you don't have any desire to allow that to occur. And so the longer that doesn't occur or isn't allowed to even surface itself, then things begin to change, because people go about their day-to-day business and they keep building things in the environment of things that are actually taking place, right? So they're not questioning those environments, like the crypto thing. Like I think that there's a lot to be still sorted through in the crypto environment, but I'm seeing more and more people actually transition their investments into crypto environment that are genuinely like more normalized investors that are now migrating that way. That's either going to be a very dangerous situation, but if there is no volatility in that situation, then that is where people would head, right?
Path of least resistance.
Correct. And so then it will then change over a period of time. Typically these reset periods of volatility are sound and they're useful, and in nature you get them, right? But we have taken it out of the system and we won't allow it to happen. And when that happens, I do believe that you're starting to flirt with what framework do you work with? And I'm not 100% sure of that answer, but that is something that I've been thinking about and something that we've been discussing. Is once the distortions are the normalization, then the normalization is the distortion, and it becomes very paradoxical.
I have a little bit different, take, which is the regime change, and I mean politically also, of people over profits might start to kick in and cause this migration, or this closing of the distortion, meaning the wealth inequality is one deal through unlimited QE, and fiscal QE is obviously intended to get more into the consumer or individual hands. But the point of this rotation also back into U.S. manufacturing, and this drive to do much more through fiscal stimulus to drive more U.S. manufacture and just U.S. based economy growth is going to help the dollar rise. I think the dollar right now is absolutely out of favor for all kinds of really good reasons. The devaluation of the dollar and the increase and the equity inflation and dollar deflation. It's really clear what's caused all this inequality. But now if they're trying to kind of close those alligator jaws, if you will, then I think it's going to actually create that disturbance, but it's a little bit early. It's early innings.
Yeah, for sure. How do you close an inequality gap? One side's got to meet the other side, right?
Well, yeah,
In any kind of like measurement, right? So it's like either somebody's got to lose money or somebody's got to gain a lot more money while somebody stays in a static state, right? So the wealth inequality thing, either they redistribute, right, wealth from the top somehow, or they bring everybody up. Seems like, to me, there is some counterparty there
and
that's
they're
got
doing both.
Got, I mean, but the redistribution isn't really, I don't, that's we have to see how that actually shakes out.
That'll be a while.
Because you don't have typically, so let's say you had a market drawdown where you would allow for a different generation to enter the market at a different price, right? So let's say that you housing crashed and you were able to get in at half of the price that it just was 6 months ago. That is a generational opportunity, and that is a generational impact to one of the other side. So there's a winner and a loser in that, right? So I think when you look back historically, like prices, like it's what you pay for a house in like 1970, right? You buy a house in 1970 or 1980, right? $70,000, house worth $600,000 today, right? That's a generation. So that even though there was like fits and spurts in there, it was a generational rise. You look at the house price now, get in at $700,000. Is that going to go to $1.5 million, right? Or are we trying to reset the prices back, right, to where somebody can get in a different
cost of materials continues to go up after multi-decade lows. Yes.
Yeah. So to me, like the cost, the house has to come down, but then the response to that is, well, interest rates are really low and the mortgage payment's affordable, right? So it was all about the mortgage payment, which doesn't make sense. So I think that, the going back to the levels that you had in generational differences. So like even back to like 1990, 1995, the price of goods and services and all across most everything is significantly drastically higher than it was then. And, you've got to have just a pretty significant reset, which the EPS is showing you is trying to naturally reset with the earnings per share chart that you showed, in the gap earnings. But like that isn't allowed to happen. So how do you actually get a reset in that environment? Like if we're not going to allow a natural event to reset prices to an extent, will that still naturally manifest itself there's nothing that can be done to stop that? Or are we going to have some like Frankenstein thing here? Right. And that's just a question. It's just a question. I don't have an answer, and I'm just posing a question, and that I do think we should all think about, because if you continue you continue to expect the mechanism to happen, right? It's going to happen. It has to happen at some point. But if they're not, because it's a manipulatable environment to an extent to where I can push on these levers to avoid that from happening, the only other outcomes are it overcomes those levers and forces it, or they just hold it and it gets broader. And what are the impacts if it gets broader? And I think it gets broader, but I think it gets broader before you get that natural potential snap of some kind, right? Which we just are not really sure exactly what that would be at this point, because it's not in the incentives of the people pushing the major political decisions to allow for volatility to take place. I mean, you look at, and now we're hearing a COVID narrative around the world. India is like, we talked to some folks, we know some people in India because we work with development people, and like they're looking at national lockdown again.
Yeah, Turkey announced today too. Every day it seems like there's a new country that's going.
Yeah, except not here, right? And so then that could be a totally different kind of byproduct, right? Where these other countries are stopping and we're opening back up, full-fledged with a hot economy. What does that have? How does that play into that? That's the conversation we're talking about, where they're not going to allow it to happen. I think that you got to kind of really, truly entertain two sides to this at this point. That does this stretch to places we can't fathom, right? And what would that entail? And then also at the same time, think about if there is a trigger, it could be more violent than you've ever imagined. But I don't know what that would be when you got, basically a pinning, a government underpinning, right? Right. Like we've seen, and think about this too. We had someone, my wife is from in Norfolk, Virginia Beach area, and she was talking to somebody the other day that runs a restaurant out at the beach, known them for a long time. And she said that they had to close because they couldn't hire enough people to actually work. More people were staying at home on subsidies than they were actually there able to. And this is a well-established restaurant. Like that's that jaws to me widening.
But that will spur
totally
wage inflation at some point. But for right now, there's still a lot of folks that are under the table working, but also collecting unemployment. So there's you're right. But that's still anecdotally this narrative of trying to find a trigger when all I know is that outliers revert, oftentimes with velocity, and the distribution, whether you do standard deviation or any other means of charts like Microsoft and NASDAQ alone, they're so far from their mean that we don't need very much. For example, earnings, they start tomorrow. So we're going to dig into earnings, but there could be some, buy the rumor, sell the news collectively. Maybe they are absolutely astounding earnings, and yet there is still this kind of disappointment, or it's already been priced in. And they sell the event. Whatever is coming, there is always the risk. Right now, for 2 weeks solid, it has been a NASDAQ rotation. Value hasn't fallen very much, and which also tells me that is still sticky. So for 2021, I still think that the pro-cyclical trade, if you will, still has a lot of support. And I also don't think the Biden administration wants it to go very far down, the rabbit hole again. There's just too much incentive, if you will, to rotate and stabilize at the very least those market players, because tech is still very far removed from the mean. I mean, I can show you what I mean.
Yeah, go for it.
Just a few charts on a quarterly, just for giggles. All right, so this is just using a price chart here with the Qs. The Qs on quarterly, monthly, weekly. This is yearly. We're obviously extended, and we're likely on our way to what? 355. That was a price target that I had given for like a next level. But this is getting what I'm talking about extended from the mean, where you have normal distribution a little bit. Let me show you kind of like this is small caps. Look at that, extended from the mean. So we don't really need too much to kind of bring it back. Look at Google. Nice, loves this 10 period moving average. It's way to heck up here. So I don't think we need very much to kind of bring it back into a normal level and then digest again. But we need a trigger.
What do you think if options start traded 24/7?
Ooh, that. Whew. I still think it comes down to leverage. Like, how much can the hedge funds overnight get for leverage, to do that game? Because I don't think retail, even though micro Bitcoin futures are coming, and the Coinbase IPO, which is a mega IPO, ginormous, 100 billion valuation, very, very solid, 9 times expected earnings, all of the wonderful things that you want from a mega IPO. And I don't think that necessarily means a top. I just mean that it, like you said, is this going to promote more risk-taking 24/7? I think it will, endear more hedge funds to get with banks and get more leverage, but I'm not quite sure retail's going to jump on that bandwagon so much.
I know they're doing the VIX 24/7.
Yep.
And they're doing SPX 24/7.
Yep.
One of the things that I've seen is the kind of the international desire to get into liquid markets, and the U.S. market being the largest, most liquid market in the world, has brought such a mass kind of focus to that. And I think that the exchanges are very much trying to push through 24/7 options.
And why not? They can do it.
Yeah, I mean, it's a vehicle in and of itself. So I wonder, like, this is what that's kind of like, I that part of it was loaded to an extent to when I asked it earlier, that the longer that things go on, where a new kind of floor is set in the entire infrastructure, things evolve to a new place. And then that's the new kind of level of functionality. And, not that there wouldn't be some volatility pockets in that, but it just seems to me that the more I see the interactivity inside the exchange environment, it's like, man, everybody wants to get involved and we could turn this into 24/7. And that then, like, yeah, I don't, that's got its own ball of wax too, right? So maybe this is the peak kind of behavior that this, really is, like, before we all reset our expectations of of what markets can be. But I genuinely, some of this stuff is like eye opening, to the sense where you have to, like, take a step back and go, oh wow, this is dramatically changing to an extent. And what does that potentially mean? So I just throw that out there, anecdotally. So I definitely think, because I'm looking at the cues. And it was interesting, like, the cues were the the NCAA tournaments, like 1 or 2 sponsored. Like every 30 seconds, you saw a QQQ Invesco ad, right? On the NCAA tournament for March Madness or what have you. And that was about the time that I started to see massive call volume come into Invesco, right? And it was turning, and hey, there you go. Right. And it's hot again. It's like a buying opportunity. And it was the only thing people see. You got so many people interacting. I can watch the TV. I see the game, and I can go place the order right there real quick with the flip up of my thumb. I do think that stuff has to be accounted for to an extent, like that it's actually, impacting things, as opposed to maybe just before 2017, you didn't have that swipe up, right, to trade. So I wonder how that impacts, like, some of these mean reversion things that we've looked at over the course of time with the infinite liquidity. So it becomes very, very important for pockets. Like, you do your pockets where you're hitting all these trades with the options that you do on a day-to-day basis, and you're finding the catalysts and the movements. Like, it seems like there might be more more of that than less of that until something breaks. Effectively, like more movement than less, until something would actually break, which I don't know what that would be. I'm rambling now.
We're both fascinated by what's happening. I am on a much smaller time frame, so this is why I love to wax philosophical with you about what if, because I don't know either, but I'm looking for a narrative always for the risk.
Yeah.
In the meantime, long value has worked, long growth has worked, especially in the past 2 weeks. And that was kind of interesting because the reason why I glommed on to the ARC trade early 2 weeks ago is because of Raoul Pal, who is the Real Vision founder, who had put out a tweet that he actually thought Cathie Wood was a genius and the long ARC was a great idea. And I'm like, oh no, now we have something even bigger than the Reddit signal. We have Raoul Pal and his, minions, millions of minions. And it was in fact an absolute low in ARC, and it has turned violently higher in all things ARC. So it was, we're sentiment driven in this market. No one's paying attention to risk. And that's typically when complacency is challenged, in my experience. So has it been an absolute fabulous trade? Yes. Am I looking at end of month options and then the sicko, Barton Wang crowding out thesis coming in the 20th through 25th? Yes. But in the meantime, it's just smoke them while you got them.
Yeah, 150%, especially like in that context. Like, you look at this stuff and you see, you can just see where the high volume is flowing on a day in and day out basis, and just follow that around.
Well,
right?
we got to talk about the volume as it relates to option flow, because obviously I've got
Sure.
my themes that I'm looking for: seasonality and signals and technicals, and they all triggered on this NASDAQ rotation. But we got earnings coming up, and earnings I hate, because you got really a 50-50 shot, and I don't like those odds. Playing cards for me is I want 4 out of 5, right? Not 2 out of 5, not 3 out of 5. I want 4 out of 5. and then it's a high probability trade. Otherwise, it's gambling. So I would love to know, let's take a look at your options matrix, because this is revolutionary as it relates to the speed of option data, and then we can visualize it, we can manipulate it into scans and filters that float our individual boat. I sent you my favorite scan for a future thing. That's what I would want to do. But I'm just saying, this is earnings season. We don't really have, I can talk fundamentals, and there are folks that do a fabulous job of putting together the bullish case for an earnings season that's going to, inspire, right? Lots of bulls and satisfy, the investors as well. Until we actually see the market reaction to the earnings, we won't really know. Right? And even if we're right on how they're going to deliver, the market is always very fickle when it comes to post earnings, IV crush, and whether that stock goes up or down. For me, it's much more of a crapshoot. So how can also your options matrix product that you're going to go over kind of keep that in mind? Like looking for the flow for earnings plays, especially we're kicking off with banks tomorrow, and folks I'm sure have their own kind of favorite stocks that they want to look at for option flow. Let's do that. Let's talk about options matrix, because we can't figure out the big picture until we have more, more moves that confirm, inflection point. And right now we just have lots and lots of FOMO.
All right, you gotta let me share
I can share. I don't know why it doesn't do that. Okay, so I wish that was just a setting, would always be there. Hit it.
Okay.
All right, so we're going into demo mode for options matrix, and I am hoping that you can just talk, and then anyone who has questions, hit us in chat. Hit Jonathan up in chat.
I'll kind of give you high level stuff here. Like I won't try and sell it too much. Anybody be able to try it next week. So not this week, but next week we'll be dropping it out. So if you sign up for the early access, that's early access next week. So if you're not on that list, you won't be able to get it until later. But the early access stuff is on the links on all of our social. So effectively, there's three parts to this structure. You got a tape, and that's the tape, which is, it's closed for the day. I'll show you that in a second. But the tape is, it's by the millisecond. You're going to see order flow as you want to see it. And, it's categorized. It's coming in anything over $25,000 premium is going to drop into that. Then you've got your ability to search for anything that you want here. On the side, and build out filters, right? So there's three different modes to this product. You got the kind of the flying tape, then you got the actual tradescape, which is landscape views of the options infrastructure that's taking place during the day, and the insight's going to be down to the detail level. This is stuff you can build your own bookmarks, kind of any kind of own searches that you're looking for any type of drill downs. And then you got watch lists and stuff like that. So what you're looking at right here is actually my Momo stocks. And my Zoom is kind of eating me up here a little bit, so just bear with me. But this is kind of the landscape for the day. So in my actual view of these Momo stocks is what I'm looking at right here. You can see, and we made this for ourselves to an extent when we're trying to drill into this stuff. So what does actually this look like versus just a giant view of order flow, and then actually create the visualizations for it that are very simplistic. This also auto adjusts on a constant basis during the course of the day. Market's obviously closed right now. So you can see in this environment that Tesla is just this monster, but you can also see that there's nothing here in this list I have that's red. There's nothing even neutral.
Yeah.
And we track this even on a PC basis. There's some stuff in here you can look at and drill it down. But when you click into this, you can see which orders are actually driving that order flow for the day, right? And dive into it. But like when I'm looking at this is the Momo stuff you were just talking about a few minutes ago. Just as an example, I don't even need to look at much more. I don't even need to look at orders, right? And go into the second level. I'm just simply looking at this and I can see there's nothing about this that's inherently, right, bearish at all. Like nothing, right? And if you look at it this way, that you can kind of see the size
is wild
of the entire of the entire structure. So like you can see that Tesla is just, you know, and if I show you like all of it, like the entire market structure just versus this Momo category set I have right here, it just is illuminating. Tesla is legitimately the entire stock market, and you can see it on a daily basis. So if you're looking at like maybe gold stocks, like I know we were talking about gold stocks for a while. Like if I was looking the other day at gold stocks, and we got all the filters in there. We've got our own formula for the float. Let me. This is the tape. I can't do the tape because it's closed. So you asked me if I just take a quick video of it or what have you. This is like during the course of the day, right? What's transpiring. You can filter this, do whatever you want with it. The energy reading that's coming through on this type of stuff is something that we created to make it easy for everybody. That the energy is like, you know, a combination of IV, bid ask. We have that data, aggressor side, sell side, all of that. So you don't have to look at like 19 different things and kind of empirically or create your own formula. This is literally giving you an idea of if that was a really strong purchase or if that was a really weak purchase in associations. There's a whole definition of all this stuff in here. You've got all of the major functionality that you're looking for. So like it's pretty rich. Like so that's yeah, I'm just getting into the tape.
That is over the top, like over the top.
So what I would tell you all is that this is built for an easy user interface that's fast. So like if we can't eyeball it, right, you'll be able to create an unlimited amount of alerts. You can create alerts based on your own search structure. So like all these types of features, you can create alerts to try, you know, constantly, whatever you want, push, you name it. It digs all into that, whatever you want to do. I don't want to eat this whole thing up like going through product, but we've got races, animations. There's a lot of visualization in this application, so that you can very quickly see what's transpiring. What I would tell you is that like 3 weeks ago, when we were looking at this, I forget what day it was, and I told you this last night, is that you could see the actual change in this coloration, right, in real time. Like because this is real time information and it's being delivered instantaneously or as close to instant. It's nothing's ever like, you know, it's coming from somewhere to somewhere. So it's not like, you know, it's the same like nanosecond, right? But it's very close. And so you're getting this and you're seeing it. I told you I saw this, like the whole thing. I saw the, I'll put it back here we'll look at the total flow for today. Like it is the entire market quickly changed. So this went from, this structure right here went from blood red. It was blood red in the morning, right? And then 11 o'clock, it started to pepper change to yellow. And as soon as it did that, like the first one went to green, which was Tesla. Tesla went green and VIX got crushed. And it was instantaneous. So it was the next 5 minutes. So if you saw this, you could have flipped your position and then 10 minutes later, it was done. It was all over. They had blown out every position in about 10, 15 minutes. So this is like super imperative to have this kind of perception into the market, that of what's changing and to see it like kind of in real time. You also got alerts. So the next thing I would say is here, you can build your own library. You can cross-reference these lists. We have our own sector stuff, all that good stuff in here where you can drill in. So the next thing is like scans. So like, you know, this is what you're talking about a second ago when you're talking about scans and like actually digging into like things that are movement. So if we're living in this environment, right, where you're looking for kind of good delta moves, right? Like things that are going to move or things that where's it flowing to, right? This is like way beyond flow. So this is actually the, you know, measurement in the entire market, plus it can adding to it fundamental under data, right? So like we've got basically ref data, all the cross reference. So like Wall Street Bulls, for example, is like, you know, effectively everything over institution controlled, right? So we're grabbing the institutional controls of that and also telling you, it's high volume today with options, right? So if you run this, it's going to give you everybody that's buying options on the institutional controlled products with the highest volume of the day, right? So those things come into play, and you can see that, NVIDIA, we were looking at that yesterday, right? JPM, Microsoft, and the exact strikes of these different things. What you're going to see when you look at this stuff is that there's a lot of stuff in here that you're catching maybe a couple hours later, coming across the tape from somewhere, is stuff that's hitting in here like as soon as you run it, whenever you want to run it. One thing that I will tell everybody is that as far as the alert infrastructure goes for like these deep scans, like today's calls, we're measuring like the last 10-day average of the calls, this particular call, and then we're averaging the IV of this stuff, and tell you what percentage it is over the 10-day, what percentage it is over the 5-day. Any type of data set you want us to create scans for, you just let us know. And then we also want to know how people want scans to be delivered to them. Do you want them delivered like one at a time? Do you want them in a batch set? We're going to give everybody some ability to do that themselves to an extent, and then we want them to hand it back to us with some feedback too. Like, hey, I want to be able to get an individual scan all the way across the board. So we also threw in like stuff like Theo price, VWAP price on these options to kind of give you an idea where you can actually gauge, instead of looking at all the Greeks, we can, if people want to see it, we'll show it to you. But effectively, those are the Theo price is what the option should be priced at based on the Greeks. So we dropped that in there in that context so that you can go, hey, what is this option priced at, and what is it actually going for right now as the last trade as compared to what it should be priced at. So these are all features inside of all these scans. These scans are pretty significant. They're instantaneous during the course of the day. You don't have to wait. I'm not gonna go through all of them. You guys can dig through all of them, next week as you get early access into the app. But you don't have to wait for anything anymore. You don't have to have specific different levels of products, multiple products, anything like that. You can build your own kind of library of these things. So like that's what I would tell you. Like it's a very much built for people to kind of take control of their options environment and get insights into data that are cross-pollinated in fundamental ref. You see all kinds of stuff. If you want the 10D stuff where it's like 3 days till expiration, it's under 50 cents, right? All that kind of stuff, really straightforward. But when we're looking at you can look at broad market, you can look at micro market, you can look at small to mid market. When I look at like IWM right now, for example, it's all GME driven. You can see it day in and day out. GME is the largest thing inside of IWM on the options side. So it's one thing to look at it over here as it relates to the actual, underlying security side. It's a whole nother ball of wax to look at this as it relates to the options side, because there's more options being traded than the actual underlying securities that are available. And that means that this dragging around. So whatever's happening over here is actually dragging the index related to gamma, right? You and Spot Game have been talking about that for a long time, and he's done a great job with all of that. But that directly correlates to why this stuff becomes very important, because if you don't know where the gamma is going to get pulled, then you're really kind of behind the 8 ball. So this is, I don't want to, everybody's gonna have a chance to dig into this next week. I don't want to wear everybody out with this, but this is kind of a quick overview for this. And, you can sign up for early access over there. So I'll hand it back to you, because we could go through specific earnings plays. Today, just for example, today, I'll look at the calls real quick, just to see what was on fire today from that standpoint, like, what was actually really hot. I don't know if I looked at that or puts, but yesterday you were talking about is ST&E, like the Stone one where we saw that. So like Stone was here in the morning, right after the open. Those things that hit, and it was right after the open. You'll see SPX in here, you see VIX in here, pretty much everything that's covered. We don't cover SPX and VIX and NDX in the actual tape. We have it, but that's going to have to be at a premium level for folks. This is also, very, very affordable. People, I think, are going to find it very affordable. So, when you look at this, like this is today, there was obviously some stuff going on, which is interesting because EEM had some red side today. It was kind of red, but you can see your Q stuff, which is fascinating that the Qs this, and that's a deep expiry, deep in the money and way out. right? So they're super fascinating stuff. We have all the deep stuff, deep in the money, deep out of the money, all the moneyness breakdowns, but it's all interactive, very fast. You're not going to have, and this is going to be available also completely on the phone. First part of next month.
Show the energy, the trade tape tab, because this is something worth watching, intraday. You can't see it right now because the market's closed until we get options 24/7. But explain this one particular bar, because I think this is the bomb. I just love this thing.
All right, so you've got data that's at the bid, or you got data that's at the ask. We have that information. The tape, the actual underlying tape contains certain features and functions, right? Some certain labels, right? Data information.
Can you
right?
put your cursor over the
Oh yeah, sure.
While you're talking, now talk, but so people can read that if they want, because
Yeah. So it incorporates multiple components. So instead of you having to have all of those different components up and kind of garner something, we've created our own formula basically that takes all those individual elements and adds them together to give you a form of energy on the bid, right? So effectively, how was that? I shouldn't say on the bid, on the trade. So effectively, how was that? What was that? Was that a soft, right? So it was sold, right? Like with somebody on the soft side, or was it just very aggressive? I wanted that with all the energy, the aggressor side data, the above ask, all of those types of things would lead you to a very high energy, right? That means that somebody was very hungry for that purchase. We also have the filters set up for those things. So you can actually filter it based on the energy, right? So sweeps with high energy, blocks with high energy, the entire infrastructure. So it is a proprietary formula. It's got a bunch of different components in it, but what it's meant to do is to eliminate, having to look at 9 different data points. You can just look at something very quickly visually, and you'll be able to eyeball it, and you see something come across the tape. So I mean, everybody's got their way to utilize something like this. We put all the different elements that we saw from the scans that are deep scans, and they're very fast to the tape, where you can eyeball a tape and set the tape up to run a certain way that you want it to, or you can look at the tradescapes. Like I personally am so visual and kind of kinesthetic person. I like to see that. I spend a lot of time, like when I have it sitting up, I have a tradescape up, because like I can see it change in real time. We also have the gauges that you can pull out that show you the PC ratios and all that stuff. But like you watch the tape change, and it's interesting. It'll change like depending on if you're watching your watch list or you're watching the actual the major indexes. Like you're looking at SPY or looking inside IWM or something like that, or you set anything up, you can see the like I saw GDX. So like for a while, the minor sector, PM sector, it was red and yellow day in, day out. So it's neutral to bearish.
Yep.
And then the last like week and a half, it's been green every day, like solidly green.
Yeah,
when you dig in,
yeah,
when you dig in, when you dig into that next level, like when you actually dig into the next level of the actual, like, so if I dig into Tesla, for an example, and I'm looking at all of the actual largest strikes inside of Tesla that are like maybe top 100 or what have you, as long as it's visible, you can actually see which one's the largest one sucking in the volume on the day. Instead of having to go like scan for that kind of stuff, you actually see it instantaneously. Just eyeball, bang, there you go, and it will give you in size and scale comparative to everything else that you look at. So really, really fast way visually. This is me personally. I prefer visualizations. We've got the alert infrastructure. If you just want stuff push notifications, you can do the scans and the tape. So we think it's like it's something that we find extremely powerful. But I'm going to let everybody kind of give us their feedback. Everybody that we've had beta tests and so forth just is loving it right now, especially, depending on, we've got a lot of different use cases. I got some folks that just love kind of tracking the broad market with it. And I got folks that are just eating scans up all day. Like they're just eating scans up all day. So it really depends.
Yeah, I'm a scan girl. So I create my own scans, and obviously I want to now overlay or build then the options matrix, whether it be energy or I don't know what. But what do you have for, because you were mentioning it's really a challenge for the open. There's so much data that's just flooding the exchanges, and very few can get this right. So how are you handling that just overstimulation of data first 9:30?
Well, it's fine if you're delayed, right? Because if you're actually delayed, you can, you're just brought it on. I mean, it doesn't matter, right? By the time that it gets to you at 9:45 or 9:40, whenever you're running something, then you consumed the rush in the first 5 minutes and sorted it through. This is real time. So it's like happening, the 9:30.01. And you can't imagine how much data is flowing instantaneously. The options market is so much larger than the securities market. The quantity of volume is just insane. And so we've had to create special protocols in place to actually deliver that instantaneously at the open. So those things are still being stress tested because you only test it once a day, right? So you can't recreate the open of the stock market. So that's actually the only reason the thing is not actually out right now, is as soon as that gets nailed down, then we'll roll it out for everybody to start messing around with it. And I would say as people begin to utilize it and turn it into a form of part of I think it should probably end up being a staple for people, especially the way we're doing a mobile app, is that, give us what you want to put in there, we'll put it in there. This is really, at this point, there's nothing I can't build with it, because we've got all the data across all sets and we've merged it into the entire. So we got all the market securities data, all the options data, all of the volume data. This is it's the same kind of deep level, TD Ameritrade type stuff. So whatever you want built, you just let us know. If it's not in there immediately, then we'll either do it quickly or put it on the run list. So that's
if I have go back to the user interface, if you would, if I have it on, because the first 10 minutes I think sometimes can be extremely telling. They just hammer, or sweep particular plays that then end up being trendable all day. They get in early, obviously, or before some news. So in the first 10 minutes, that energy graph, is that what's full on, and you can sort. That was my question: is can you sort by that energy reading? In other words, how trade? Yeah, under trade tape.
Oh yeah, absolutely. Yeah, absolutely. You can totally sort by that. So if you want to hit the first 10 minutes and you're looking for everything, you can literally set like a setting, like if you want solely energy, like a piece of cake, right? So like if you only want energy to be the thing rather than sweeps, blocks, what have you, like any type of data, like we could just set up like low, mid, high, right? Moderate. You could set the bars, right? We could even set it as a filter. You want to set how many energy bars you get, because there's 15 bars in energy, right? And it's a mathematical computation based on a bar structure. So it's a very easy thing to do. Set up I want to be all. I want it to show everything only based on energy. And what will happen is this graph would change based on the energy. So if whatever I switch over here is changing any of the modes that I look at.
Okay.
Right. So whatever I'm looking at, yeah.
The one that you're showing right now is a composite.
Yeah, this is aggregate. Okay. So this is this is today's total flows. I've just kind of given an example, but because we could be here all night, but effectively, if you were looking for, you could filter, right, by that, you can sort by that. So if at the open, you can be sorting for those particular things. You can wash out all the small stuff. You can even create your own filter over here.
Can you do a sector? Okay, go back to trade tape if you would. Humor me, because I have two questions. One, trade tape. And then can you literally hit the energy bar and sort by that from greatest to least?
Yeah, 100%.
Okay. And then the next is, can I go in and is there, show me if I want to look what the option flow is the past week for banks.
Okay. So we're going to, sectors will be in there.
Yep.
By the end of the week, where you just select banks. Yep. And you get the same view. Right, and so you can see it. You could do it by size. You could do it by timestamp. Okay. You could do it by date. You could do it by ticker.
So that's what I want to do. I want to look at size of bank position, option flow. I want to look at the last week. Going into earnings, for example, if I'm curious. That's just an example. Okay.
Yeah, exactly.
You'd lots of flexibility in doing scans, and on top of the existing scans that you already have. Can you go back to the scans again, where folks can find that?
Yep.
What'd you hit?
I hit the little looks like a little scan thing, like a sonar radar, whatever you want to call it.
Okay, the filter, the scan.
Yep.
All right. So, and which ones here are your personal favorites?
Oh my. I don't know. Like, I wrote a lot of these, like, based off what people were looking for, or it just depends. Like, earthquakes are great, 14 days to expiration, IV greater than 50%, more than 2,000 volume contracts traded today, right? Like, it's really, you got, it's really the rate of change is what these are. Again, your rate of
Where's the
change,
rate of
right?
change? I love
Right.
that.
So that's like is the 10-day average, right? So what is the 10-day average, the last 10 days on this particular? Is it open interest? Is it volume? Is it underlying securities volume? Is it the actual, combining of those things? So like, what is that rate compared to the last 10 days? That's a really, really straightforward piece that we have in a lot of places.
Okay.
You've got the change in IV, right? You've got the change in, we could do anything, change in delta, change in, I mean, anything you want really at the end of the day. These are like, I would say like, as we build this out and everybody starts messing with it, like, and you tell us what you want, like we can start categorizing this stuff for you and
So where's
put
the
them into different buckets. Cheat sheet.
Yep.
Each individual one of them has its own like kind of details on it,
All right.
right?
The tooltips are built in. There's just the hover.
Yep.
Okay.
Totally built in. Yeah, so it's totally built in. So it's very much like a Spotify type interaction. And
Awesome.
we didn't build it out so that you've got like multiple layers where you got to go dig into it. And as we add them, then we'll categorize them. But you can also search, like I want to search for calls, right? I want to search for all the ones that have IV in them. You can just search them and it'll create it. You can also favorite them, and you can create your own library with the bookmarks.
Okay,
So
so go to, for example, on fire calls, since we had so many tech plays that were explosive today, from Zoom to Tesla to Docu. I want to see what then
yeah,
what you then
you
what made
got
you do this.
yeah. So you got cues. We looked at this a little bit earlier. So you got the cues, and you got lift. It's twofold. Like I would say, like these are the ones that have the absolute most, like by individual call level, right? So if you're looking for specific calls with specific strikes that are specifically garnering a lot of action that are not necessarily the normal action for those, that's exactly what's happening here. So it can have a lot of these different things here, but you might find some of these are actually strikes. So you got Roblox in there. We're seeing a lot of stuff today. These are the ones that are massively changing rate. If you go over to like let's say up to 500% or less, so 500% or less change day over day, then you've got totally different look. Those might be different setups. So these could be related to earnings. It could be related to what different things during the course, and it will change during the course of the day as you go through it. So like, that's one of the things that we want, like people to tell us how often they want to be delivered scans, right? Like, do you want them every 10 minutes? Do you want them every 5 minutes? Et cetera. Like that's something that, do you want individual ones? Do you want unique ones? Do you want them to be on like some particular level? That's the kind of feedback that we actually need, because scans are even a whole nother level, right? It's a whole nother level of functionality.
Okay. Fascinating. Any questions anyone has? Because I mean, obviously, this is visually easy to use. It's real time. I mean, talk about how slick the speed is and how scalable this is, because a lot of folks have delayed option data. They don't even know it. And I for one, like I said, I'm a longtime user of Wall Street Jesus, because it's context of the flow, but the flow is delayed. So it's not going to be anywhere near as instant as this. So we have
Yeah, this is real time. So is pro non-pro, like people need to identify because they're getting access to it. But once that, like, it's most everybody's non-pro for the most part, and it's very affordable, and it's as real time as it gets. So when you hit the scans at 9:31, it's 9:31. Now I would say, like, it's interesting to see, like, when you look at that, the tradescape as it unfolds, that's 9:31, and that's what's happening, right? So this is instantaneous, right? It's not delayed, and the scans, like, you're hitting these scans, and that's happening right then. So like you're hitting the whole entire option market right then. Typically, what we've seen is like people go get like some product that's out there that's like very 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 expensive,
Yes.
and kind of utilize something like that to then deliver something out. You don't have to wait for something to be delivered out, or you don't have to go get that product. You can just get it right yourself off the shelf and be running down the road with it and have it in those types of insights in there. So I don't know that there's ever been anything that's this accessible. And I think it's super necessary in the macro picture, and that's why we did it, because the options market is overwhelming the stock market. Having the ability to see this in the micro level and not having to wait for anybody is so important.
Yeah,
because now you're in the trades that like you're not waiting for signals, you're not waiting for anything like that. You're in the trades as you see them unfold as they're unfolding, and that's the key to the whole thing.
I'm excited about it because obviously in my live trading room, I'm looking at momentum entering, an underlying, and I want then confirmation that there's option flow behind it. So for me, this is not only instant data feed where it's trustworthy, but then of course I can do, the sorting, which is fabulous to see which ones have energy. That single stock gamma option flow is prominent in certain plays, and you can see it kind of come in before the stock takes off. But also, I love this scanning feature that you have, this matrix, if you will, the Spotify matrix. But then I have my own scans. Like I want to build that in. There will be others. So talk about the and of course the sector review, and that just you've built in so much. It's not only Speedy Gonzalez fast, but you have such flexibility, and individuals can use it how they see fit.
Let's like
That's
roadmap,
like
roadmap too is that we'll set it up. This is so that it's mass consumable out of the box. Like you make it a part of your workspace, right? Like a pivotal part of your workspace on a day-to-day basis.
Yes. And to that end, Martin is asking, what subscription model? Monthly, annual? What are
monthly? It's a monthly deal. It's not going to be over the top. I can't tell a price yet, but it is not like you'll be like, oh man, this is great. Like I would tell you that it's great. So once that drops next week, then everybody will know what the price points are. But this is going to have a certain level of ability to make it your own. And then we will do another level up later, probably this summer, where you can open up the entire scanning infrastructure so that you could build your own. What I would say is that's just something that we wanted to bring this to the table first, because it's the most in demand product that we've seen from most of our users. So we're going to deliver this first. It's going to be on the web next week, and then the phone the 1st of May. And our whole phone app is being revamped right now. And then you've got the summertime, we'll make it to where people can, pull from our entire data set. Now, what I'll say is when you are using this, you get our entire data set from the whole app. So you'll be able to get all the fundamental and ref data that we're pulling off of and everything else. So you still get access to all that information, and you don't pay anything extra for it. So it's included in all of the what you're doing. So this is the beginnings of that workspace. We already have the charts and everything else, but this is really meant to be kind of out of the box. You can framework exactly what you want, set up the structure exactly what you want, and then you go to that kind of second iteration, which is kind of really institutional. Like I always say, yourself, like proprietary trader environment, where it's I want to create some really, really wild stuff. That's we'll open it up. Yeah.
I know exactly what I want from it.
Yeah. Well, you got an inside track. We got your charts too. Those are out tomorrow. So and those looks just phenomenal. And what I tell everybody is you could see in these charts, you can see the front running or the bifurcation. So you can see where where her readings have changed and price has not caught up, or the reading has changed and price has not caught up. And so I think that this was a great addition. I think it's way over the top for you. So shameless plug from me. So that's a great call.
Thank you. Hard work. My gosh, it's going to pay off. All right. Android version is the question. When will that be rolled out?
100% this summer. Yep.
Okay.
100%.
Okay. On everything. Well, can't wait. All right. So we'll pick up next Tuesday, and by then the first drop will go
live.
Live. My stuff will also be the chart overlay will be live. So lots on the FinTech rollout in the next few weeks, and then Apple Store and all that jazz, and then Android later this summer.
Yep, 100%.
And about when will you have the key products of NDX, SPX, and VIX in the options matrix?
We have them. We have them. We just, if enough people are looking for them, we'll turn them on. They're there. They're there now.
I know,
like
but
I
extra
just,
costs and all that jazz. So you said
yeah,
the
well,
pro level.
yes and no. The pro level, to have that other, but we weren't going to include it in the pro level. That was just going to be like a data ad. If people, it may not even be a data ad if enough people ask for it. I don't know if enough people look for that right now, but we'll do some poll as soon as we go live. And if enough people want it, we'll turn it on. We got it. So it's up to what, it's kind of up to you guys. If there's enough demand for it, then we'll turn it on. We turn it on the scans because you definitely want to see it, but we didn't turn on the tape because I'll tell you, it's like, SPX, NDX, RUT, DJIA, VIX, those things are busy. Those are busy. So like they get busy in there. Like, and they start to overwhelm, like, you're looking at other stuff. So you'd have to sort through that, it just depends on what people want. So we're why don't we have it? It's just up to you guys.
That's why I thought you said it was going to be the institutional add-in, because there's so much hedging going on there in the options market using those products. So I thought maybe that was going to be later. In any case, we have a lot of info, both market structure, where we're at, and for sure the options matrix. Can't wait. Thank you for your questions, and I'll refer you into Q&A, Jonathan, because there is a question. iPad. Will you be able to?
Yeah, we'll put it on the iPad. Like it's got to start at the web. Everything's got to start at the web. Then it goes to the mobile and the devices, right?
Okay.
So there's a different optimization structure that goes on all those, and they have to like kind of flow down. That's the delivery path, right? You either go from the phone up into the web. That's why Robinhood has no mobile or no web app. They are a mobile app, and that's it. Like we're web down. So we'll bring it down that way. So I'd say like first, I can't give you a date in May because I don't have that yet, but the first 2 weeks in May, you'll have this on the phone and the iPad.
Okay, we'll wait anxiously. Thank you so much, everyone. Okay, so Thursday I have my Women in Trading and Finance feature for macro to micro power hour. So we're going to talk Tesla and bonds, an expert in that space for the past few years. So I'm looking forward to that. And you can sign up right on this lovely website here. Otherwise, follow me on Twitter because there will be an announcement as well. But it's under interviews. Anytime you want to see what's coming forward in future shows, we've got Vicki Bryan and then Russell Rhodes, who is a VIX guru. Actually, he worked for CBOE. He's an excellent teacher. So every Thursday, there's going to be a different macro to micro power hour. But every Tuesday, it's going to be Jonathan, and I'm looking forward to next week after we get through month-end expiration. So
absolutely,
turning out the last of this, and then once it drops, you and Laura really should go on a little vacation. Let everybody just kind of like, ooh, ah.
Well, it's not. Then you get a lot of people that hey, I need this, I need that. So you'll probably
you worked hard. Drop it and go.
All right.
All right. Take care, everyone. Bye.
Thanks, everybody. Bye.